Hi everybody, this is a short, quick video to show you how to use a worksheet to solve or to create a statement of cash flows. In order to work through this video, you will need to have with you your book open to chapter 23, problem number 5, and you'll need to go online to the Course Connect website and download the setup for this problem. I've already put it together for you in worksheet format so that you can start working through it with the video and then again in class. If you don't have both of those things, go ahead and stop the video now and come back to it, because this isn't going to make a lot of sense without it. Alright, so assuming you've got both the problem in front of you and the worksheet in front of you, let's talk a little bit about what a worksheet does. And I mentioned this briefly in class. I showed you the example in your book. Every worksheet for a statement of cash flows is divided into two sections, the top half and the bottom half. Now, if you've printed off the Excel worksheet that I gave you, which I kind of hope you did, you can do this with your computer, but it may be a little bit harder to manage. It prints off in two pieces. If you were looking at these in Excel, though, it wouldn't be 2 pages. It'd be 1 page on top of the other, so one long page. The top section is what we're going to call the balance sheet effects section. That's going to show your beginning and ending balances in every balance sheet account. The bottom section is set up to capture the cash flow effects that we're going to find as we analyze these changes. And the trick to this is it's pretty straightforward. If I work my way through every single account and I can explain the net debits and credits in every single account, I can pull out the pieces of those explanations that relate to cash flow and put them in the statement of cash flows. That's the idea. Now, it can be kind of complex to do it, but that's what we're working towards. This is from your book. There's really 3 steps here. It's not nearly as short as it sounds, but you start off by gathering your balance sheet information so that you can see beginning balance sheet, balances for each of your balance sheet items and ending balance sheet items, ending balances for each balance sheet item. And then the job is to work through the balance sheet and explain those changes, and let, in step 3, any increases or decreases in cash show up in the bottom half of the worksheet. And as we go, we'll define each change in cash as either being operating, investing, or financing. Alright, so this is what you should have from your Course Connect website. This is problem number 5, the Alexander Corporation. And all I've done, I've kind of flipped the presentation. And for each account, I'm showing the beginning balance or the ending balance at December 31st, 2013, and the ending balance at December 31st, 2014. And I have out here on the side an increase or decrease in each account. The other thing that's a little different is that these accounts are not listed the way you would find them on the balance sheet, but instead they are listed in order of debit balances here on the top and credit balances here on the bottom. There we go. So for example, you'll see machinery and building up here with the debit balance, but the accumulated depreciation accounts down here. All right, so you have to know that this is a credit balance in income taxes payable that increased from $79,000 to $90,000 over here. You have to know that these are debit balances that increased. All right, and so for example, if I'm interested in, let's say, the patent, right? The patent went from being $64,000 at the beginning of the year to $69,000 at the end of the year. Now that may just be that we went out and we bought $5,000 worth of patents, and so there's going to be a debit in this column that would explain that change. It could also be, though, that we bought $100,000 worth of patents and then we sold $95,000 worth of patents. And so you have to have a lot of information about the company in order to make this work. Another reason that you do these statements of cash flows at the end. But we're going to work our way through these accounts and look for any piece that would actually affect cash flows. If we find a change in account that affects the cash flows, like we purchased a new patent with cash, we're going to drop to the bottom half of the worksheet. And here you'll find it's divided into 3 sections: operating activities, investing activities, and financing activities. We'll show inflows of cash in the left-hand column. Yes. And outflows of cash in the right-hand column. All right? So for the patenting, for example, if we purchased a patent for $5,000, we would show that as an investing activity that used cash. So we would have a credit over here. Ultimately, if we do this, enough, if we work all the way through these accounts, we're going to be able to come away with the bottom half of the worksheet representing our statement of cash flows. All right, so let's take a look at how we're going to work through these. All right, so you have your beginning data for the Alexander Corporation, and there are a million different ways to approach this problem, and any of them can be right. It doesn't matter exactly where you start as long as you work through every account. I always start, though, with net income. I know that the production of net income will increase retained earnings, so it will help will help explain the change in that account. And it is my opening line under operating activities in the statement of cash flows. So for this particular company, we know that income, if I can find it, there we go. Our income was $115,000 for this particular company. Now, that number, you get that number by looking at the statement of retained earnings, and they had $25,000 in income for the first quarter of the year, and then they had $90,000 in income for the last 3 quarters. So this is a combined number, $90,000 plus 25. That $115,000 I'm going to show as an inflow in the statement of cash flows under the operating activities section for net income. I know it's not really cash, but that's how we start when we use the indirect method. I'm also going to use that $115,000 to explain part of the change in retained earnings. It, in fact, as we created income, it in fact increased our retained earnings account. Now, I'm going to do 2 journal entries on this page, and then we're going to jump over to the worksheet and show how they would be represented in there. All right, so just hold on. This is worksheet entry number 1 for net income. For worksheet entry number 2, I like to go to the additional information that's provided to you. In practice, it doesn't really work that way, but in the classroom, they always have to give you some additional information about the balance sheet and income statement, or you're not going to be able to explain the changes. So I work my way through that first. It tends to be the more complex information. If you get through that, it gets pretty easy. All right, so if you look at the additional information, it says your working papers from the audit contain the following information. Item number 1, on April 1st, 2014, the existing deficit was written off against paid-in capital created by reducing the stated value of the no-par stock. So if you go back to the December 31st, 2013 balance sheet, you'll see that at the very beginning of the year, the company had a $450,000 deficit in retained earnings. All right, so they were at a negative retained earnings. If you also look in the book at the beginning of the year, in the in the first 3 months, they created $25,000 worth of income. So that $450,000 deficit at December 31st was actually $425,000 at April 1st. Right? And April 1st is when they're going to make the transfer. So what they did on April 1 was they debited common stock for $425,000 so they could fluff up retained earnings and bring it from a negative to a 0 balance. Now there's no cash effect here, but it does help us understand the change in the accounts in the balance sheet, and that's good. So if nothing else, it tells us that, well, this particular change doesn't have anything to do with your statement of cash flows, but it helps us understand what happened there. All right, so here are your 2 journal entries. Hopefully you've got these written down somewhere. Now let's go look at how you would enter those into the worksheet. Okay, I'm going to go to the bottom half of the worksheet first. And the first thing I'm going to do is debit my net income for $115,000. And then I've put the number 1 out there to denote that that's the first worksheet entry. Then I'm going to jump, Then I'm going to jump up into the balance sheet, and I'm going to credit retained earnings unappropriated for $115,000. For my second journal entry, I'm going to debit the common stock, and I'm going to credit retained earnings. Now what happens here is, if you look at these 2 credits to retained earnings, I've explained a total of $540,000 increase in retained earnings, but in fact there was a $470,000 increase. So I still need to show something that decreases retained earnings by $70,000. In other words, I'm not through with retained earnings, is what I'm saying. I still have more to explain. I'm also not through, I'm also not through with common stock. I've shown that common stock went down $425,000, but it actually only went down a total of $277,000 for the year. So there's going to be some other increase that's going to come along, right? So I'm going to keep up with how much of the increase or decrease I'm explaining as I work through here, because by the end of the day, I need to have explained a $277,000 decrease in common stock, not a $425,000 one. Okay, but that may take me getting through a lot of information. All right, so let's take a look then at the next additional piece of information, this will be our worksheet entry number 3, but it's the second piece of additional information on your in your book. On November 1st, 2014, 29,600 shares of no par stock were sold for $257,000. The Board of Directors voted to regard the $5 per share as stated capital. All right, now that definitely has a cash effect. We're getting $257,000 for selling stock, and we've already said that that represents a financing activity. So the journal entry we would make in the worksheet would show a debit to financing activity for stock sales, $257,000, a credit to common stock no par for the 29,000 shares at $5 a share, and additional paid-in capital for the difference. Okay. In item number 4, we're going to purchase a patent. Okay, now it comes from additional information number 3. We bought a patent for $15,000. When we did that, we would have debited the patent for $15,000, and we would show the credit to investing activity patent $15,000. I'm losing my voice. All right, so let's take a look at what that looks like in the worksheet. All right, so for item number 3, we have 2 credits here, one to to common stock, and the other to additional paid-in capital. You'll notice that the credit to additional paid-in capital fully explains the change in that account. You'll also notice that the debit to the patent here more than explains the change in that account. On the flip side, oops, there we go. So we've explained the change in common stock. We've explained the change in additional paid-in capital. We have not fully explained the change in patent. On the bottom side of the worksheet, you're going to find, here we go, debit to financing activities for selling stock, $257,000, and a credit to purchasing the patent for $15,000. Okay? All right, let's take a look at another journal entry. Our 5th worksheet entry says that we're going to sell machinery. This is from the 4th piece of additional information that says we had machinery with a cost basis of $16,400, on which there's accumulated depreciation of $5,200, and it was sold for $9,000. No other plant assets were sold during the year. All right, so we're going to take the machine off our books by crediting it for $16,400. We are going to debit machine for accumulated depreciation on the machine for $5,200. We are going to debit the cash, but in this case, investing activity, sale of the machine, for $9,000. And we had an operating loss here of $2,200. That operating loss was deducted to get to net income, and so we need to add it back in our operating activities section of the statement of cash flows. All right, there's a lot of information there, so if you need to stop, go ahead, take your time. You've got the balance of the machinery that's being taken off. You're getting rid also of its accumulated depreciation. Where we would have received cash in the actual books, here we're going to treat the cash as an investing activity. And the difference between what we received and what we took off our books constitutes a loss that has to be added back to our operating activities. All right. So here again, you can kind of walk through what we're doing in the worksheet. I can only show you half at a time. This was journal entry number 5. So here's your debit to, well, let's start up here. Here's your credit to the machinery. Here is your debit to the accumulated depreciation on the machinery. And the rest of this journal entry is going to be on the bottom half over here, where we're going to write in loss on machine, and we're going to be adding that back to our income, to our net income in the operating activities. And we're going to show the actual sale of a machine as a source of cash under the investing activities. Okay? All right, next worksheet entry, number 6. This relates to additional information in item number 5. And these are a bit stinky. So in item number 5, you've got the 12% 20-year bonds were dated and issued on January 2nd, 2002. Interest was payable on June 30 and December 31st. They were originally sold at 106. The bonds were redeemed at 100.9 plus accrued interest on March 31st, 2014. Okay, so we've got a few things we've got to do here. The first thing is that you've got to deal with the fact that there was an accrual of interest for that 3-month period. All right, and that accrued interest on the retired bonds that were issued at a premium decreases interest expense. And that decrease in interest expense is non-cash. In other words, it means that what we recognize as interest expense is less than what we paid in interest. And that difference is really not cash. It's an accrual basis method of accounting for our bond, but it has nothing to do with cash flow. So we need to start by figuring out about how much interest did we accrue on those bonds, how much interest did we amortize our premium for on those bonds for the 3 months from January 1 to March 31st. All right, so here's your calculation. You started off with a $6,000 premium that was being amortized over 20 years, and I wanted to do a monthly amortization, so 20 years times 12 months. So it was being amortized at a rate of $25 per month. Since the bonds were, that shouldn't say sold, since the bonds were redeemed on March 31st, the effect in 2014 is 3 months at $25 a month, or $75. Okay, so the journal entry that we're going to be taking a look at, this is going to help explain the decrease in the premium account, and this is an operating activity that an adjustment that we need to make to net income because it represents something that has nothing to do with cash. All right, so the journal entry there then for item number 6 is the debit to the premium on bonds payable and a credit in the operating activities section to amortization of the bonds premium. Okay? Trying to stop and give you time if you need to stop and go back and look at any of these. All right, next item. We're still working on redeeming these bonds, so we're still in that additional information from number 5, because once they did the accrual and they amortized the premium, then they still have to redeem the bonds. And what they did with these is they redeemed them at 100.9 on March 31st. So we need to get rid of everything related to those bonds, and meaning the bond and the associated premium, and then recognize any gain or loss. All right, so the first thing we do is we're going to debit bonds payable for $100,000. That's pretty straightforward. We're going to debit the premium on the bonds payable for $2,325, which, I don't think I put that in there. That $2,325 is the $6,000 in the original premium minus the $3,600 that had been amortized through the end of the year plus $75 more. All right, so it's $6,000, your beginning balance, minus $3,600 in amortization that you had taken since the bonds were issued, plus $75. Sorry. So that's 6,000 minus 3675 gives you the 2325. Now, what we paid to redeem the bonds is $100,900. That is a financing activity because that is an interaction or transaction between the company and a creditor. The difference, though, between the amount of the bonds that we retired and what we paid to retire them actually ends up being a gain. We ended up paying less to retire them than it would seem they would be worth on our books. That gain is included in net income, but it is a non-cash gain. The cash is all here and how much we had to pay to buy the bonds back. All right, so for that gain that's included in net income, we need to back it out. All right, so when you look at your financial statements for journal entry number 7, here is, or worksheet entry number 7, here's your debit to the bonds payable. Here's your debit to the premium. Now you'll notice what I've done here is combine journal entries 6 and 7. Journal entry 6 was a debit for $75. Journal entry 7 was a debit for $23.25. So I've just put those two together in Excel. On the flip side down here, we're going to create a place in operating activities to subtract out that gain that was added in because it's not cash. And then we're going to drop down into our financing activities and show that we had an outflow. We had to use our cash to redeem those bonds and retire them. All right. Okay. I think that is as far as I went with all of this. We'll go ahead and pick the rest of this up in class, but I just wanted to make sure that you were clear with what the worksheet's doing, and you had a few examples to see before you come into class. Bring your template with you, bring your book, and we will finish the rest of this then. All right, see you later. Bye.